Hi there, welcome to Neppy Invests. Hopefully I am coherent this episode because I've just finished 2 night shifts and the company that I have probably the largest holding in at the moment, one of the largest holdings I have, decided to release their Appendix 4C when I was in between night shifts. How mean of them. I'm going to have a word with management. But anyway, they released their Appendix 4C on the Wednesday, the 28th of October. I did have a quick read of it and I didn't expect much from the market, but the market went down 12% at the worst, but it's rebounded quite nicely. In fact, today I'm recording this around about midday in Brisbane, and even though the overall market's down over 1%, AVA Group has rebounded. They did their AGM today, so the AGM presentation might have had a few interesting nuggets. I haven't had a look yet. But anyway, this whole video is about the Appendix 4C for AVA Group. It's been going through a tear in the share price lately, so I think maybe some of this selling yesterday was just some profit takers getting out because maybe the Appendix 4C didn't have as much news as they wanted. I don't know. So this is the numbers in the operating cash flow. Receipts from customers, $13.9 million, and our cash flow in operations to the tune of 3.7. Both of those numbers were slightly lower than the previous quarter, and also slightly lower than the numbers they gave us for their quarterly update, but in their quarterly update, they gave us revenue and EBITDA. And don't forget, receipts from customers and revenue are not the same. And even though I sometimes use EBITDA as a proxy for operating cash flow, you can't always use that as a proxy. It's not an exact proxy anyway, but it's roundabout a proxy. So this is the history of cash flow and receipts going back to when they first listed or IPO'd on the ASX in July 2015, or just slightly before that. Maybe it was around May 2015. Anyway, you can see the history. So the bars there is the cash receipts and the cash flow is just the line. So of course, what I'm looking for here is nice uptrend in cash receipts. And usually if you do see that consistently over time, eventually the cash flow will take care of itself. And we've finally seen that the last few quarters. You can see going back, the cash flow was mostly negative, except for that one quarter in January 2018. For some reason, they were $2.1 million positive, or $2.4 million positive, but they couldn't really maintain that. But the last few quarters, we've seen the cash flow from operations around $4 million or so on much higher cash receipts. So everything's looking good in AVA Group. We knew this quarter was going to be good. It was not, maybe the numbers weren't as high as the previous quarter, but when you look at the revenue and EBITDA, they were actually a little bit higher. So some of that revenue that they mentioned that hasn't quite seeped into the quarter will come in next quarter. So I think it's fairly safe to say the next quarter is going to be quite good as well in terms of cash receipts and cash flow. So some of the details in the report, not a lot that I didn't already know or we shouldn't already know. So net cash, $11.6 million. So they're starting to build cash, which means with the market cap, they have a market cap around 100 million. They're still, enterprise value is still around 90 million or so. So still not that expensive at all. Cash receipts, so they did receive $1.3 million cash receipts from the Indian Ministry of Defence project. I've got a little bit of on that on the next slide. So if you don't know what that is, that was one of the big projects they were doing, and they're starting to get some cash from that project now. And they are expecting 2.6 million expected next cash receipts from that project next quarter. That's in Australian dollars, not American dollars. So they listed both in the report. And from the 19th of October announcement, they did mention from the quarter they were getting $17 million revenue and $7.7 million EBITDA. Again, cash receipts and revenue are not exact. And the main reason they're not exact, you see the 100-day payment. So 120-day payment terms, which means you can get revenue booked this quarter, which is they've got, and not get the cash from that revenue or that project until next quarter. So that's the main difference between cash flow and revenue. You can sort of recognize the revenue in one quarter, but you don't recognize the cash receipts until the next quarter because you don't get the cash immediately. And they have a 120-day payment plan or something. So that's the main difference between the two. So this is their chart, and if you've seen my other videos about the AVA Group, you know the chart is fairly bullish. So even though they had this big down day yesterday, you can see that if you look at the little candlestick on yesterday, there's a nice little, not very long wick, but there is a nice wick at the bottom. Just there was a bit of buying when the share price got towards its low. You can see a few days ago we had a sort of a candlestick that was complete opposite, where there's a nice long wick at the top. I'll just get my mouse. Actually, what I'll do is I'll just turn this into a laser pointer. Maybe it's easy to see if I do that. See this nice long wick here. So that's actually suggesting there's a bit of selling once the share price got really high. It's a bit of selling, and that's suggesting there's going to be a little bit of a sort of a bounce back in price. So you would expect the price to actually lower from then. Exactly what it did. With this sort of wick, it's not as long as this one. You can expect there's a bit of bullishness with the share price, a bit of buying when the share price got low enough. And even today, even though the day's not over yet, we have seen the share price rise from its low. So even though the share price has been dropping, there is a bit of support once the share price gets towards about 52, 53, 54 cents or so. So you can see, yeah, share price is up today, 3.5%. Last, when I did this video, up towards 60 cents again. So, you know, the AGM presentation must have gone well. Maybe it had a few nuggets in that. But otherwise, it's good to have a good green day in a company you own when the rest of the market's tanking. This is the Indian Ministry of Defence contract. I haven't really mentioned this before in another video, I don't think. So it's a fair bit of money, 16.7 million Australian dollars. And they've only recognised $4.8 million of yet. So they've still got a lot of money to come in this project. And then they've still got, over 7 years, they've still got $4.8 million of spares and maintenance contracts with that in regards to that project. So this is just one project. Eventually it will stop, but hopefully once it stops, they'll have all these other projects coming online. So anyway, that's all for this video. If you have any questions, leave it in the comment section. Otherwise, I'm not an advisor, so if you need to speak to an advisor, make sure you seek out a professional. Everything I tell you in this is just for entertainment, educational, and what's the other purpose? Research purposes. That's right, research purposes. So have a good day, and I'll talk to you again in another video. I'll probably do another video, a few videos today. And in fact, all the 4Cs are coming in thick and fast now, so I'm going to do a lot of videos soon, because one thing I'm really finding about doing these videos is actually I learn a fair bit, especially companies I haven't done a lot of research on. So these videos help me out a lot, and hopefully it helps you out a lot too. So have a good day. Talk to you later. Bye.